All right, guys and gals, back to work here tonight. We're not finished up with the week yet, and we certainly aren't done with the month of May just about yet. We get some more fireworks coming tomorrow. I want to make sure we are locked and loaded for the end of the month, end of the week. We're back in the action, though, once again here tonight. It's Thursday evening after all. It's May the 28th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow's trading session. And I got a great video, a jam-packed video in store for you tonight. The charts are all prepped up in the background. As you can see, we got the S&P, of course. We got some oil, and we got the gold, right, the yellow metal on the schedule tonight. I got a lot to talk about, a lot of ranges, but a lot of momentum swings. And we'll talk about how that plays into tomorrow's trading session. Speaking of tomorrow's trading session, got a bunch of news coming out tomorrow. We got some scheduled news. We got some unscheduled news. We'll break everything down here and put the plan together for Friday's end of the month and end of the week trading session. Before we jump in, though, and put the whole plan together here tonight in the video, I just want to make sure to remind you to subscribe to our YouTube channel. That way you never miss all the good stuff we publish on this channel every week. And don't forget, if you have any questions, don't forget to post those questions in the comment section below. I'll get those answered as soon as I finish up here tonight. And as always, if you tune in every evening, if you rely on this video to get your head right and get your charts right for tomorrow, hit that thumbs up button for me, will ya? Always appreciate you guys showing the love by supporting this channel, by subscribing, typing those questions in, and hitting that thumbs up button if you find value in the video tonight. But enough of the introduction. I'm itching to get going. I'm sure you are as well. Time is ticking. Let's kick the video into gear here tonight. Let's check the calendar for tomorrow. Start tonight's video because let's take a look at what we have on the schedule here for tomorrow. Wrapping up the week, end of the week, end of the month. We don't see this very often, and with that comes a powder keg of potential volatility. Tomorrow, of course, is the last day of the week. It's also the last trading day of the month. Anytime we find ourselves at the end of the day, end of the week, end of the month, we expect to see more risk taking, right? Traders in the market get desperate. End of the week, end of the month, and as we get later in the day tomorrow, you can expect price action to get a little more unrealistic, a little more just a little more irrational, right? And very jumpy price action as we go into the end of this week here. So we've been talking about this all week. We know it's the end of the month, and so the end of the month is always increased volatility. But with tomorrow being the end of the week as well, we definitely expect tomorrow to be potentially a very volatile session. Now, with that said, it's also important to remember that Fridays are early in, early out. We trade together every morning in our trade room from 8 a.m. until about 11:30 Eastern Time, Monday through Friday. But on a Friday session, we're usually peeling things off at 11 o'clock Eastern Time. And really, you've got to have a really good reason to be trading after about 10:30, 10:45 on a Friday. So we typically will trade together every morning in the trade room from 8 o'clock to 11:30. But Fridays, though, right? Fridays, you're not going to be, let's put it this way. It better be a darn good setup with good momentum, good levels of support and resistance, and a good entry setup to be trading after 10:45, 11 o'clock on a Friday morning. So tomorrow morning, make sure you get to that desk early, right? Don't hit the snooze button too many times tomorrow. We get some big news coming out tomorrow early in the session, and we know that as the day starts to get later, we know traders become more desperate, right? End of the day, end of the week, and of course, end of the month. Now, looking more closely at the news tomorrow, you'll notice we got some big blocks of news here. Got the international trade number and the personal income number at 8:30 Eastern Time. That will definitely get us started off tomorrow morning. As we go later in the session, this is where I start to get excited. That Chicago PMI and the consumer sentiment number. That PMI number, remember, anytime you see PMI, PPI, HPI, right? Anytime you see an I in the end there, right, you know you're probably going to get some movement on the dollar, on the gold, on the E-minis, on the oil. So we definitely looking forward to that 9:45 news. followed up by that consumer sentiment number. Now, we also have the Jerome Powell speech. I don't expect him to have too big of an impact on us here on Friday. I think he's doing like a keynote speaker or something like that at some online webinar or something like that. I don't think it's going to be that big of a deal. I do expect, though, the majority of people to be watching other events that happen tomorrow. There's a lot going on out there right now. For example, we heard about the social media what was an executive order. Everyone's talking about how Twitter, Facebook, Google, right? They're staring down the barrel of a new executive order out of the White House this afternoon. We're all kind of wondering what will happen with that tomorrow. How much, I wouldn't say will, but how much will it affect? Obviously, marks like NASDAQ, right? So if you're a NASDAQ trader, you got to be thinking there will be some response tomorrow. It may be choppy price action. It might be very, very, very volatile market. So that may be a big factor. In fact, that may be responsible for dragging down markets like the S&P. And if the S&P collapses tomorrow, it could also drag down the price of oil along with it. So I do think that executive order that I believe was signed a few moments ago here in Washington, D.C. at the White House, that might just be the most volatile potential headline for tomorrow's trading session. And then let's not forget about the press conference that we just heard about from the U.S. President Trump. Supposedly, we're going to hear tomorrow at some point. I haven't seen any specific time on this, but supposedly there'll be a press conference tomorrow at the White House with, dare I say, some news on the response to China. We've been hearing back and forth between the bickering between the U.S. and China about the coronavirus and the handling of it and who know what and what they did and what they didn't do. So there's been a lot of finger pointing lately. We'll see if those finger pointing turns into more stern language tomorrow. I would imagine that has potential to really lock things up tomorrow. I haven't heard much as far as what time tomorrow, but I probably will get an update at some point overnight tonight or tomorrow morning. What I hope he doesn't do with this press conference is put it in the afternoon, and then we've all got to kind of wait for that. So that's kind of one variable tomorrow that, markets may stall, and they may wait, and they may chop, and they may go sideways. So, be aware of that. That is completely out of our control, but we'll know more about when the time of that press conference will be, and then, of course, we can deal with the repercussions, right, that come with it as well. We also keep hearing more about these stimulus packages right now, right? This back to work bonus they've been talking about, right? The payroll tax waiver for small businesses. There's a lot of different stimulus scents in the air right now. So you can see there's a lot of stuff under the surface here right now, in addition to what is already a pretty busy news day for tomorrow. So I'll tell you, if I looked at this on the surface, on the paper, looking at this on paper, it looks like a very busy day tomorrow. I am super excited to have you guys with me every morning in the trade room, right? Tomorrow morning, of course, we'll see you guys at 8 o'clock Eastern time. And don't forget, guys, I'll put all of the membership information to get registered for tomorrow morning's trade room. I'll put all that info in the description of this YouTube video. If you're on the blog at Sideways Markets right now, just look right below this video and there'll be a big button there for you to get registered and come join me tomorrow, and we can do all this together. I think the only concern I have right now is that executive order and this press conference for China. That's the only thing I worry that might stall things out here, and people may just obsess about that press conference tomorrow. If this was 6 months ago, during the negotiations of a trade deal, I would say it definitely will. We've seen these markets shake off the tensions in the last couple of weeks. So hopefully that doesn't, not drag us down, but stall us out for a bit. That is probably the biggest threat for our trading session here tomorrow. No matter what, though, whether we get a great active session or it's slow and sluggish, we'll be there tomorrow morning, 8 o'clock Eastern time, with our plan in hand, disciplined and patient, executing the strategy together. Now, Speaking of the strategy, let's get some charts going here tonight. I get some S&P, my favorite, right? The oil, another very good friend of ours in the trade room, and of course the gold, right? The yellow metal. Now, all of these markets have a lot of momentum going on right now, right? Big momentum push lower on the S&P and the gold, right? Big push up here on the oil. So nice momentum moves right now. And with that momentum, there's a lot of very important clues hidden inside the candlesticks here. Let's grab a look at charts here first. Let's grab some S&P. Going into the S&P 500, and what do we know about the S&P right now? We know that we kind of got what we bargained for. If you watched last night's newsletter, I talked about the fact that we had gone so far, so fast, that it was almost inevitable we'd go sideways the following day. And that's exactly right? We definitely saw this thing, right, go sideways. And you'll notice, right, the market tried to make a run higher here. They stalled out, and, it did what a range does. It dragged back down into that range. So in all reality, if I was to describe this market right now, I would say it is a range-bound market. There is definitely a bullish bias to that range. However, there's a very strong move coming off the high. So momentum is a concern to be a buyer. So I know the market's range bound. What's the plan for a range? The plan for a range is to buy low in the buy zone below, sell high in the sell zone above, and stay away from the middle. Now, knowing that, we have a definite bull bias going into that range. So if I could only trade one direction, either buy or sell, it would be the buy side because of that, right? Because of that momentum direction. Now, knowing that, I want to be a buyer down here, but then I've got the big elephant in the room, and that is that big move down. Anytime we see a big move in any direction, for that matter, bullish or bearish, I expect to see another leg in the same direction. On top of that, you'll notice I've got this trading range identified, and I've measured the amount of the move above and projected it down to that low to create what we call a pendulum swing. So there's quite a bit of information that's important here. The bull bias tells me focus on being a buyer right now, right? That's where your money is best spent. The second thing is focus on buying underneath the range, because it's a range-bound market, right? We want to buy low, sell high, and avoid the middle. The third clue says you got to respect these bears because we know they're probably going to give us another leg going lower, and we got to respect that momentum and plan accordingly. So that's exactly what I'm looking forward to here tomorrow. So as I forward now, just kind of scroll this thing forward here, what I'd really like to get my hands on, of course, staying out of the middle there, what I'd like to do is I'd like to get this thing finished off, this second leg, get them the pendulum swing, and then get this thing going back up into that trading range. There's a couple ways that I want to do this. Really kind of ideally, I'd like to get that next leg through, get down, at the very least, get down underneath that prior swing. I really don't need to get the pendulum swing. Pendulum swings are their general locations. They're not exact. So I don't need to hit that, 14.5 area over there. We don't absolutely need to get that low, but it certainly wouldn't hurt. That's for sure. If I can get that next leg lower, now what that will do is that will kind of satisfy the hunger of those bears. Now it's time to put them back up into that trading range. And to do that, what we'll look for is, this again is after I retest that low, right? They get the job accomplished. They get that second leg. Once they get that second leg now I can start looking relatively aggressively right here into that range now. Now, what I want to see here is I want to see one of two scenarios. The first one's going to be a real strong bounce right off that low. This, if it literally traps and bounces here, as soon as I see a strong green candle closing above the moving average, I can jump right in on that as a two-try failure pattern. So the first scenario is, do we just simply tap that low and get that strong signal candle closing right back above the moving average, getting me in before we get back into that range? That's one scenario I'm watching for here in the short term. Another scenario would be, do we go through that low? If I back this up a little bit, do we go through this low? Now, if we go through this low, that's a lot different. We're not seeing as many buyers jumping at the opportunity here, right, to buy off that low. So in this situation, what I want to do is I want to wait for a failure pattern. I'm going to wait for the price to pull back to the moving average. With the market pushing through that low now, I would anticipate you're going to see traders who will say, okay, lower lows, lower highs, sell that pullback. I'll anticipate bears coming in to get short at the moving average, and that's when I know I got them. Now I've got their stops right where I want them, and now those stop losses are the fuel I can buy now going back up into that trading range. Now, a lot of times, these particular types of setups where we drag that thing lower and we catch those bears on the wrong side of the market, a lot of times this thing will snap up, pull back, higher high, and then trap low, right below that low. This is a very common kind of combination. It's a failure pattern into what I call a two-try trap pattern on the way back up. Remember, the goal here is to basically trap the sellers on the wrong side of the market, buy into those stops, and then don't chase after it as it goes higher. Wait to pick that little low right there, because that's going to be where all the pros are waiting to avoid trading in the middle of that trading range. Does that make sense? Right? So that's going to be, those are three easy setups that all going to do is wait for that next leg lower. Now, we may not get that full next leg lower. A more aggressive way in is to look for this as a crown reversal, right? Another setup I'm watching for here right now is a crown reversal. Now, crown reversals require a very strong reaction off that trap low. What you got to remember is this is going to be the more aggressive entry on this, which means we need to see a pretty nice signal candle right above the moving average, but not too big. We don't want to buy it inside the range. If this was to trigger and go inside the range like that, what I'll do is I'll grab a buy limit order, and I'll grab that limit order and bring it right up underneath that trading range, and I'll wait for it to come back and get me in, right? Does that make sense? We'll do this obviously together tomorrow in the trade room, but that's the technique, right? If for some reason that crown reversal was to really jump, right? Because if it jumps up, I don't want to buy inside the range. I want to buy just underneath it. So I'll grab that limit order. I'll put it right underneath it. So those are some key setups I'm watching for here on the pullback. Now, the hardest part here is probably going to be if we end up back inside this range and start chopping around here. If we end up back inside the range, this is going to be difficult because we're not going to want to chase it. We're not going to want to trade inside the middle. What you want to do in this situation is wait for the market to pull back below the range and look for that failure pattern again. Okay, this momentum now at this point will be absorbed quite a bit. So at this point now, as the market tries to go lower, I'm waiting for sellers once again to try to commit, right? Let them try to sell off that pullback, going back down to that big round number. And we're not going to try to pick the bottom on this. I'm never trying to pick the bottom. I'm simply waiting for evidence that these sellers have committed to that pullback. Once they do, then I got their stops right where I want them. And remember, when you buy into the stops of those breakout sellers, when those sellers realize they're wrong, they get out of their short positions and they become buyers right along with you. So buyers are buying, and in these specific, what's called a failure setup, these failure setups are also buying, right? So sellers are buying and the buyers are buying. Very, very powerful stuff. If we don't go sideways here, right? If we continue running higher, let's say we do run higher here with a very strong run higher. If we can get some real strong movement here, I will always look for that two-try trap pattern. Just make sure you get into this pattern before we get up to retest those highs. That'd be the very big key to this setup. So if we do see it start to make a run, if it really runs and really jumps as it goes, watch for this key setup. It's a shallow pullback, it's a higher high, and it's a trap low. Again, these are called two-try trap patterns. Very reliable, but they got to be lit, right? I mean, they got to really jump, right? The fuse has to get lit as it runs up there. It's got to have that sense of FOMO. In fact, I always kind of joke around by saying you might as well call this a FOMO pattern, because that's exactly what it is, right? You're capitalizing on the fear of missing out. And then last but not least, as we go higher here, if we pull back to the moving average, we jump off the moving average. Now that becomes what? That becomes a 1, 2, 3 reversal. Now momentum for the bears is gone. I'm going to mark up that high. I'm going to mark up that low. And again, your job here is to make sure we're getting in before we get back up to retest, right, those highs here. The objective at that point is to buy the pullback, right? The goal is to buy the pullback off that hidden channel, right? It's called the 1, 2, 3 reversal into a hidden channel pullback. 1, 2, 3 reversal into a hidden channel pullback. Now again, my target is up at the top of that range, but really I'd like to get this trend line, right? If you got an extra bullet in the gun, right, one extra contract to leave as a runner, might not be a bad decision to float that runner up at the top of that triangle, because after all, that's really what this is, right? It's one big expanding triangle. Now we trade triangles a lot in our trade room. Tomorrow, 8 o'clock Eastern time is no different. But I'll tell you, if you're not going to be with me tomorrow in the trade room, the next best thing is to grab our free trading classes. I'll put a link in the upper right-hand corner for you. Pause the video. Not to worry, I'll be here when you come back. Pause the video, grab that link, and get registered for our free trading classes. It's well worth the time, because you'll learn my 4 favorite setups. You'll learn my failures, pullbacks, trap patterns. You'll learn how I trade breakouts. You'll learn everything you need to at the very least, follow along with me here on this nightly newsletter. So grab that link that popped up there in the upper right-hand corner. And don't forget, throughout the video tonight, I'll put all of the important information for you guys, all the membership links, all the free course links. I'll put all that stuff down in the description of this YouTube video. All right, so now we get a pretty good idea how to be a buyer on this. You might be wondering, at what point does this thing become a bear market? We have to hold this pullback. We've got all this bear momentum right now. The bears are very strong, right? But we don't have the bears in control. Now, how do the bears take control? They have to show us they want this and run. If they can really push through these lows, the pendulum swing, if they can push through these lows now that creates that 1, 2, 3 reversal, or 1, 2, 3 breakout. And now I can look for that hidden channel, mark off the low, find the high, and I'm selling off the high of that hidden channel. Now, ideally, again, I want to see a very strong jump off the moving average, and ideally, I want the first test of that channel high. It's a very reliable setup, but you got to wait for that 1, 2, 3, and bam, right? Wait for that nice jump off the moving average. Now, I'll tell you, the 3,000 round number appears to be an easy target, but like I said earlier, with that pending press conference on China tomorrow, and with that social media executive order, my biggest thing is we may see those the FANG stocks start to bring this stuff down tomorrow if this really gets bloody. So that's one of the big concerns I have for tomorrow. How will this new executive order impact the NASDAQ? Will the NASDAQ bring down the S&P? And of course, I'm not going to try to predict the move, but I will wait. If I do get that strong move down, though, it's not far-fetched to think this market could bleed out and run all the way down to retest those lows where we were just 24 hours ago. So very, very possible. We'll have to wait and see, though, what we get on the way. Don't forget, at the very least, grab that free course I mentioned linked up in the upper right-hand corner. In the meantime, let's get some oil going on the video tonight. What do we know about oil? Well, on the oil market, we know it's kind of the tale of two ranges, right? We saw the market open up in a range. We then saw the market 1, 2, 3 breakout, which eventually ended up in another range. And then we saw another breakout running higher. And I would call this a two-legged pullback with a trend line coming down. Now, if I was to describe this market overall, I would say we're definitely bullish. we have a difficult pullback, right? It's a difficult pullback because you got that trend line coming down overhead. And you've also got this overhead resistance here, which is not very forgiving up here. The measured move is obviously the objective at 34.09. But if you look a little bit further out, you'll notice kind of what's going on right now, right? We've got this what looks to be a pretty big range up here, right? It looks like one big range. So, we definitely can see the buyers have control right now. There's no doubt about that. And I do want to be a buyer on the next pullback to finish off this move, but I've really got to be careful, right? I've really got to be careful as we push higher here. In other words, if I want to be buying as the market goes higher, I've got to see some really strong momentum in order for me to justify that. At the same time, too, if these buyers fail, we may easily find ourselves back inside the battle zone right in the middle, or potentially all the way back down to retest that low. Like I said earlier, we got some big stuff coming tomorrow, and we really don't know the extent at which that could drag things down or push things up, right? I would find it hard to believe, though, that the U.S. President Trump would say something tomorrow about China, but they'll make the markets go higher, right? Unless he says, we're all good. Everything's cool with us. We're buddies now. They're going to buy a ton of our stuff, right? That's probably not going to happen tomorrow on that press conference. I'll wait and see, just like the rest of us will. So we'll see how this thing plays out. Now, trading the chart here, though. I think the biggest thing I want right now, if I could have a dream come true right now, what it would be is if we go right back into this battle zone, a lot of chop and slop there, and I would imagine if we could get a nice pullback into this area, I'd love to see a nested failure pattern and back up again. That would be, if I could paint my own picture for tomorrow, that would be the setup that we get tomorrow. Nice strong pullback. After all, we got this trend line coming down, right? So let them get this trend line of the system, right? Let them get the run lower. Let them try once. Let them try twice. I'm going to draw that trend line over and look to pick that, not pick the bottom, but look to buy into stop losses of those sellers. That would kind of be the ideal scenario I'm looking for here. If we don't get that deep pullback, right, and again, this would be a nested failure pattern. I meant to be more specific on that. So if we do get that pullback again, just make sure you're aware of the situation here. We're bullish. I want to be a buyer. I've got my trend line here, right, that channel. That's a great spot for it. I'd really like to get off that 32.91. The problem, though, is as we pull back to that area now, you know what's going to happen, right? Now we're looking pretty bearish. We're not, I wouldn't say a complete reversal yet, but I would definitely say, though, at this point now, let those bears try once, let those bears try twice. Ideally, I'd like to use some trend line here and potentially combine that off that trend line, but really what I want is I want to get around that trend line, right? I want to use the one try, the two try. The ideal scenario in this kind of illustration here would be if I could get this thing to hit off of that trend line and really get right. I mean, let's be honest. If we're really putting our wish list together here, right, for the market tomorrow, that would be probably the best possible scenario there. As the bears come in, they try to sell it short once. We get back above the moving average. Above the trend line. The bears try again. Do you see how this little pattern ticks all the boxes? We know we're bullish overall, but we have that strong momentum move down. So give the bears a couple tries, right? Don't get too aggressive buying the stops. We're too bearish at that point. Let them try once. Let them try twice. Now, instead of worrying about that trend line coming down, we use that trend line as that level of support, right? I like that a lot. Nice strong signal, right? Stops are now sitting right above those highs. I like that buy setup here on the oil. And again, that will be a much deeper pullback now, right down into that support zone. Now, another thing I'm looking for here is we may not get that deep of a pullback, right? We may not get that far down the ladder here. So let's say, for example, now we still have a trend line, right? The trend line is still going to be in our way here. Let's say, for example, though, we jump up, right? At this point now, I'm thinking a little trap setup, right? One try for the bears. Now, let's back this up, though, real quick. What's my concern? My concern is a trend line, right? One. But my big concern, though, is the measured move, right? This measured move is obviously something of importance because the buyers, they've respected it before. So if the market just runs higher here, I don't want to buy it as it goes into that trend line or into that measured move. My favorite way to be a buyer but avoid buying high, which is exactly what I'm trying to avoid right now, would be a trap pattern. And the trap pattern may come in a few different, kind of examples here. For example, right, it may go up right away, come one, come two, and we're looking for a trap below that low. What I really want is I just want to find a way in with a trap setup if we don't get that deep pullback. I think that's the concern. If we don't get that deep pullback and I can structure the nested, right, and from there, if it simply tries to go higher here, I don't want to buy high. I want to buy low. I want to buy as low as I can, right? So what I'll do is I'll look for a trap entry, right, to get short, to get long, of course, right, before we get up to that measured move. Does that make sense? It's a little bit tricky, right? A little bit tricky, but shallow pullback, look for traps because you're avoiding buying too high. Deeper pullback, absorb momentum with that 1, 2, that nested, right? As I mentioned repeatedly here before. Now, if we pull back and the market keeps running, here's one thing I'm looking for tomorrow. If we pull back and the market sinks now down into this trading range, this could easily happen. The bottom could fall out of it. It sinks right back into that 3290, 3257 area. If we sink back down and we start going sideways now we're way too heavy. We're way too bearish, and we're now in a range. If we sink back lower and go into a range here now, what do we do with a range-bound market? We buy low, we sell high, and we avoid the middle, right? Now, this is a bear market at that point. Again, keep in mind, there's a big difference between going lower and then 1 and then 2. That's still a bull market, right? But if we go lower and we get comfortable down here, right? We start kicking our feet up on the couch. We get comfortable down here. Now this becomes a range. The longer we stay inside that range, the more votes are being cast for that area being the magnet. And so what do? We look to sell because we're bearish, and we sell above the range. Right? What's my favorite pattern for range trading? Failure patterns. Once those sellers run out of bullets, so to speak, now wait for that pop up. What will happen is you'll see some profit taking. You'll see a little bit of a rally there because there won't be any more sellers to keep selling. When that happens now, be on the lookout for buyers coming in, trying to buy that pullback because they can smell that reversal. But here's the difference, though. It's not a bull market any longer. Now it's a bear market, and there's a magnet right below it inside that range. Once we see those buyers commit, now we know where their pain is. Now we know where stops are, and we're selling right into stop losses. Very, very simple pattern here. Once we see it turn sideways into a range, the bears have the bulls pinned to the floor now. It pops its head higher here. We wait for those buyers to commit to buying the pullback. Again, I'm not trying to predict the top, right? I have no interest whatsoever in trying to predict how high that thing goes. Right? That's a rookie game. Wait for the buyers to commit to it, and then if it keeps going higher, then good for them, right? But if it doesn't go higher, we're selling right into those stop losses. Right? And if it does go higher, by the way, right, if they do hold that pullback, if it does jump up, what happens? That's a reversal. And then, of course, we mark up the new high, we mark up our new low, and we buy the pullback from there. Right? It's not that we can't trade long. It's just we got to get the momentum back in the hands of the buyers again. If you want to have reliable setups, you want to go with momentum. And I use that 1, 2, 3 reversal, 1, 2, 3 breakout combination to kind of qualify who has control of that market. Now, things might get really ugly if the market makes a run lower, we hold the pullback, and we jump off the moving average, right? If that happens, now this range is no more. We mark that low, we mark that high, and now we're looking at that first test of the high of that hidden channel, right? That would be a 1, 2, 3 reversal. And I realize, we all want to sell it now. We all want to sell it earlier. But we're talking about a much more reliable trade when you get further down the line. And I get it, right? I want to make the most of my money possible too. But if I focus on the money, I'm going to lose money. If I focus on the process of identifying the most reliable setups, All the books talk about it, right? Mark Douglas's books, great books, right? Dr. Brett, right? Great books. These psychologists have written. And what do they talk about? Focus on the process. Don't fall in love with the money you make. Fall in love with the art and the skill of finding the best setups. That's why I'm not trying to predict the top. I'm not trying to predict that reversal. All right, I'm going to wait for that move down, wait for the bears to actually hold it, and then I can be a lot more confident. I get it. It's a little bit later than I'd like to, but I have to wait until the market's actually reliable to be sold. That's the reality of that setup. Now, there's also possibility here too if the market rips higher. Right? Don't forget, we get a lot of resistance up here. So as we run higher here, probably the best bet will be traps. Right? So if we do end up really pushing hard here, look for traps, that 2-try trap pattern, right, as we go. Or, this will make it a whole lot easier. If we jump up, the pullback comes over, we hold that pullback and we jump. That's pretty obvious to me. It's a breakout above these highs up here. And as long as I can get that 1, 2, 3, and we get that good momentum, the first touch of that new channel will be reliable enough to buy, no matter where it is. It'll be a very reliable setup if you get the pattern. That's the key, right? And again, I'm not talking about going up and then buying this pullback, right? I don't care how strong the breakout is. I don't care how strong the breakout is. You can't trust buying that pullback. Right? What you can trust, though, is it goes up, it holds that pullback, and it jumps. Now you're talking. Now I can mark the high. Now I can mark the low, right? And I can get interested in that all day, right? Any day of the week, right? Again, 1, 2, 3 breakout into hidden channel pullback. All right, guys? How am I doing so far? How about a thumbs up in the video tonight? Have you subscribed yet? How about some questions? Any questions here so far? Drop those questions in the comment section below. And let's keep moving here. How about some gold here to wrap things up here tonight on the video? The S&P looks good. Oil is looking good. Gold is a little bit of a tricky one here because, again, we can definitely see what direction, but you might have noticed we've got a big problem with momentum. Now, how would I describe this market if someone was to ask me, paint me a picture on gold? I would say the market is bullish overall. We got 2 big, strong legs up, right? And that's, of course, where that measured leg comes here, right? Take that first leg up off there. I use that to project that measured move there. That's where that comes from. So I would definitely, I would describe this as a strong, bullish market that went into a range. What is a range, by the way? Balanced, magnet, right? When I say range, you think of magnet. When I say range, you think of fade the breakouts, buy low, sell high, right? Focus on failures, use that magnet, right? So it goes into a range, and then what do I see? I see a strong pullback. What does a strong pullback tell me? Momentum is a concern, right? Now, it may V-bottom and go right back up again, gold, end of the month, end of the week, right? We know that we know there's potential for a very volatile move here, and we'll talk about how to trade that. But anytime we see a very strong move in one direction, even if it's against the trend, we anticipate another leg in the same direction. And so this is something we touched on the first chart for the S&P. This is the same idea here on the gold. So if I could have it my way, right? If I had it my way here tomorrow, let me get rid of some of these extra levels on here. If I had it my way tomorrow, right, I would see one more leg down. I'd see that moving average come over and a strong shot right above that EMA. Again, almost instantly coming off of that low, right? It makes a 1 or 2 tick lower low and blammo, right? We see a nice strong green candle closing firmly above the moving average, right? That's going to be a really great setup because what it does is it gives the bears, it lets them get what they want, right? Because the bears have that big, strong move down. They want to retest the low. Let them have it. We can both win at this game. It's easier that way, right? We're not, I recall being a younger trader, and somebody said one time, you've got to trade with the market, not against the market, right? You're not going to force an elephant to turn around. You got to go with the elephant, right? Get on the back of the elephant. Well, right? Not literally, right? But Don't go against the market. Go with the market. If we try to fight this thing and those bears have momentum on their side, they're going to try to make that run lower. Let them do it, right? Let them do it. Good for you. Get your job done. Now it's my turn. Nice strong bull, nice strong signal. Back up into that range. The range acts, right, as a magnet. Now, if this thing really pushes through it, right? If we really push through it like this, but we don't puke. Okay, remember, this is the difference here. If, for example, let's say, that low back there, right? We get the next leg lower here, but we don't jump off of it, right? Now we kind of roll lower a little bit longer, right? Now what do? We look for that classic failure into pullback combination, right? Coming off that low, right? Failure pattern, pullback pattern, or very common in these situations, it's a failure into a trap setup. These are usually very common when you get these really deep pullbacks, right? Those are traps. So again, we wait for the price to get what they wanted, let the bears get it. Then once that lower low gets made, we wait for the sellers to commit, right? Because people will think this market now has reversed. It hasn't reversed yet. It hasn't fallen apart yet. And we can buy into those stop losses. Right? That triggers the stop run, short covering rally, the market runs higher. We don't chase after it because after all, the range is too high to buy, and we focus on buying low with trap setups. Why? Because traps are the most effective way to avoid buying too high, right? And again, in this example, the definition of too high is inside that range. All right, those are some scenarios to watch here for tomorrow. Now, we may also keep going higher here. Okay, if we keep going higher here, if we don't get that deep pullback, look for a trap. Now, why would I look for a trap here? Again, let's imagine that we go higher, right? We go higher, we pull back, we go higher, trap low. Why a trap low? Well, because obviously I want to buy as low as I can, and I want to buy at support. One of the big rules we like to follow in our trade room is to buy at support. And I know you're probably rolling your eyes right now going, really, Joe? That's your word of wisdom, buy at support? But I'll tell you right now, if you just focus on buying at support the next time you buy, I can almost guarantee you will take a lot fewer losses next week and tomorrow. If you just focus on going with momentum, buying at support with a good quality setup, right? Just simply buying off support level, right, is usually enough to keep you out of most losing trades. And that's more than half the battle. More than half the battle is simply removing all the losses so you can actually keep the money, right, that you make in your account, right, on the winners. So as the market goes higher here, right, and starts to rip higher right now, I don't want to buy up here. Am I buying at support up there? No, I'm buying into resistance. I'm buying into the range. That's the magnet. That's where they want to get to. Why am I buying now? And I realize it all happens very quickly sometimes. Trust me. It's not easy when you're a rookie. You got so much going through that head of ours, right? With CNBC on the background and chat rooms going. Believe me, I've been there. The problem is you don't want to chase after it, right? That's what rookies do. You're no longer a rookie. You're watching this every evening. You are now moving up the ladder, right, to be more experienced in your trading. We don't chase after it. And what happens is the rookies that chase after it, when they get stopped out, and this is why it feels like the markets are watching you, right? At least when I was a new trader, it felt like they had my office bugged because it would pull back, stop me out, and then rip higher, and I'm going, what the heck? Why? I was in this, right? And what's happening is when you're getting in buying too high, you leave yourself susceptible to a pullback. When you're buying high, you're buying in a place where professionals are getting out. And without those buy orders floating the thing higher here, you got to rely, you're going to get that pullback. That pullback will stop you out, and professionals are waiting there to buy it from there. So if we don't continue to get that pullback, goes higher here, right, watch out for that trap. Now, just like on, the S&P, if we go back up into the range here and we start going sideways, okay, don't get discouraged. Don't force this stuff right now. Now we're back to a bull market again in a range. What do we do with the bull market range? We buy underneath that range. How do we do it? With failure patterns. We wait for the buyers to run out of the proverbial bullets. We wait for the pullback that comes afterwards. We anticipate now rookies, inexperienced traders, Aggressive traders, they're trading off news headlines. They're trading off, right? They're trading off chat room alerts, right? The rest of us are watching momentum. We know the bulls have control. We know the magnet is overhead. We're waiting for those bears to commit. I'm not trying to pick the bottom because for all I know, this thing will keep going. I don't know that much. And anybody who tells you they do are lying to you. There's no special indicator that tells you, oh no, we're not going any lower. You bet you're right we will. The minute you buy that low is the minute it goes lower. You know how this goes, right? The markets are watching you. The minute you pick that bottom is the second it stops you out before it runs. Take that crap out of the equation. You can remove all that stress by waiting for that pullback. Don't pick the bottom. Wait for the bears to commit. And now you know exactly where their pain points are. Now you know where they get out. Now you know where bears become bulls. And that's where pros are buying. They're buying right into those stop losses. So if it goes higher like that, right, in the sideways range, look at a buy from there. Now, I wouldn't be surprised either. You know, big, strong move up. I wouldn't be surprised here. We get a press conference with China, right? Or a press conference on regarding China. We get the social media executive order. It doesn't take a very experienced technician to think, the gold might jump off this information, right? We might see it jump. If it does jump, one option is we go up, we pull back to the moving average, right? We pull back and we jump from there. Now, the measured move is there. But let's make no mistake, right? The pendulum swing overhead should be a pretty good target. Up at 1753 even, right? This area definitely is an objective area. So I want to get in before I get there. Again, I don't want to buy that pullback for the same reason why I didn't want to buy that pullback, right? You're in the middle of the range there. So stay out of the range. Wait for that 1-2 go, and then once momentum is on my side now I can come down, find that channel. And again, what I'm looking for is I call these 1, 2, 3 reversals, 1, 2, 3 breakouts. It's a momentum move, right? It's a momentum move. And once we get that 1, 2, 3, now first touch of that low of the channel, almost a guaranteed winner. Very, very reliable. Really no matter where it is, as long as you get that setup, right? That 1, 2 go. Right? I'm not trying to buy pullbacks unless I have that 1, 2, 3 go. Now, we may also see it rip, right? If it really rips higher here, strong move up. What happens sometimes is we don't get that pullback, right? We don't get that big, 1, 2, 3 move here. What we get is we get a series of shallow pullbacks that never really pull back to the moving average, and it looks like this. Right? A strong move up. It never really pulls back. It does pull back, but barely kisses the moving average. That strong move up, the shallow pullback with the higher high tells me there are buyers piled on, waiting to take that trap low and finish off this move. And again, my dream come true tomorrow, my home run scenario would be float that runner up to that 1753 and change up there, right, for that pendulum swing. Should be a good target there for those buyers. And of course, don't forget, right, like I mentioned earlier, we go over all of these patterns in a lot more detail. I'm giving you kind of the bird's eye view of this. We cover a lot more detail in that free trading course. And again, tomorrow, we'll do it together in the trade room at 8 o'clock Eastern time. All that membership information is in the description of the YouTube video. Now, last but not least, if the bears do hold it, 1, 2, 3, if this thing pukes and runs lower, we're on now to the downside. Mark that low, mark that high, and we're selling off the high of that hidden channel, right? Same basic pattern. We use the same stuff over and over again. Repetition is the key to success. Because when you get good at this stuff, you'll notice you don't need to have a dozen different patterns. You get 2 or 3 good, reliable patterns that you know when to take them and when to skip them, and you've got yourself a very promising career ahead of you. Guys, I've helped thousands of traders do this the right way over my teaching and trading career here at School of Trade. I would love to have you there, right there with me tomorrow as well. Don't forget, I'll put all of the membership info in that description in the video here tonight. Big blue button for you below the video tonight on the trading blog. Don't be afraid to call me tonight if you have any questions. I'd be more than happy to go over all the questions and get you registered. That way you don't miss tomorrow morning's end of month, end of week session. Don't be afraid to use that live support tool. I can always answer questions on the chat back and forth. And as always, if membership isn't quite right, if the trade room tomorrow isn't a good fit for you, at the very least though, grab the free course that comes along with our trial. Get registered, learn the setups, learn the strategy, right? You'll at the very least, get rid of all those easy to remove losses. It's easy to stop losing money if you know what's hurting you, right? That free trial, so the free course that comes with the free trial is a big part of that. Like I said, just have a challenge, right? Challenge yourself tomorrow. What if I only bought at support? What if I only sold at resistance? What if I only went with momentum and use reliable support and resistance? Imagine, it'd be fewer trades. You're absolutely right about that. Your broker's not going to send that bottle of scotch every Christmas, right? Because you're potting his account, his pockets. But you'll actually keep the money that you make. All right, I've gone way over my time here this afternoon. Thank you so much for tuning in. As always, subscribe. Drop those questions in. Hit that thumbs up button for me. And whatever you do, come out and join us again next time on the next edition of our nightly newsletter. Have a great rest of your evening out there. Enjoy that end of week, end of month, and come back and see us again next time. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here on Monday. Adios, amigos. Bye-bye for now.